Well, good afternoon, everyone. This is Tony Whitbeck. I'm the CEO of Key Management Group, and with me today is Todd Doherty. Todd is our Director of Acquisition and Legacy Planning and our M&A expert. Todd's going to be taking you through the majority of today's content, but before we jump into it, I'm going to spend just a couple minutes telling you about Key Management Group and what we do. So Key Management Group really is a full-service consulting firm to the financial services industry. And we offer a whole host of services. We have our practice management solutions, which involve executive coaching, operations performance package, and we have our complete practice management solution. We offer 2 outsourcing services, which include client meeting preparation and financial planning. We prepare roughly 300 client meeting preps every week for advisors, and we do about 1,500 financial plans over the course of a year. We offer a host of human resources and risk mitigation services with topics like recruiting, onboarding, offboarding, HR file reviews, compliance, employee handbooks and policies, AFA compensation design and incentive structures, and performance reviews. And then we have a host of acquisition and legacy planning services, which is really the topic for today. But you see here that we offer business valuations. We do probably 350 to 400 valuations per year, both for advisors as well as the banks in our industry that fund acquisitions. We have a turnkey continuity plan to protect the value of your business in the event of your death or disability. We have a turnkey deal-making service when a buyer and seller have found each other but need help in actually consummating the deal. We offer an escrow service, which is often used during the financing of an acquisition. We have a whole platform called Advisor Legacy, where we represent the seller and help them sell their practice. And you're going to learn more about that today. And then we also have our Elite Buyer program, which is part of the Advisor Legacy platform. So before I turn it over to Todd, I just want to let you know a couple things. One is we have a handout. If you go to the GoToWebinar control panel, you'll be able to see the handout. It's the 10 steps to prepare your practice for sale. And then if you'd like to ask a question, there's 2 ways you can do that since your telephone lines are muted. You can go to the control panel and raise your hand, and then I will unmute your microphone. Or you can type in a question, and then I'll read the question, and we'll do our best to answer it. So with that, I'm going to turn it over to Todd, and he's going to take you through today's content. Todd?
Thank you, Tony, and thanks to all of you for taking time out of your schedule to join us today. Before I jump into the 10 reasons or the 10 step checklist, I just wanted to set the stage a little bit by talking about really the market and the considerations of selling a practice. Certainly the sale of your financial advisory practice is going to be one of the most, if not the most significant transaction of your lifetime. Most sellers will only sell one business in their lifetime, so they really have no experience doing so, and really only have one opportunity to get it right, and it's extremely important that it is completed correctly. The other important consideration there is that the value of your practice is likely either your largest personal asset or at least one of your largest personal assets. And we've really reached quite a milestone in respect to valuation in our industry. Our average practice valuation is currently in excess of $1,600,000, and I think that's quite remarkable. That many of you have spent the last 20 years building a business that now has substantial value that you can monetize when you're ready to exit the business. It's also becoming more and more challenging to execute a sale that's successful. Certainly the days of a back of the napkin deal are long past us, and there's added complexity with these sales in getting them right. We're also facing some coming headwinds in respect to where the market is going. We're anticipating, and certainly this has already started, that there will be an all-time record number of advisors selling in the next 5 to 10 years. It's been estimated that as many as 40% of the advisor population will retire in that time span. And while we've been in an extremely strong seller's market for the last 7 years or so, we've already started seeing a shift into what will become a buyer's market. And that creates additional challenges for sellers in, getting the right price and terms, but more importantly, in finding, that advisor or team out there who's really going to be a great fit for your clients. So with that being said, we've prepared this 10-step checklist to really help you prepare better. Hopefully, taking some steps in advance is going to create the best outcome for you and also for your clients and staff. So let's jump into the checklist. The first item, pretty straightforward, is to start out with a clear understanding of why you're ready to sell and or retire. And those two things don't necessarily need to happen at the same time. You can actually sell the equity in your practice and not exit the business. We have many sellers that we've worked with who are staying on and continuing to work on behalf of the buyer, but they're selling the equity at a time when the value of their practice is at a high point and not letting it decline. Looks like Tony might be having some technical challenge with the presentation, so I'll just continue to move on while he's fixing that. So there's a couple of reasons why you want to define your reasons for selling. Certainly, buyers will ask that question, why are you selling? Pretty straightforward. And you'll want to be able to answer that in a meaningful way. But probably more important is to have clarity for yourself. One of the hurdles to selling, for many advisors, and this has prevented many from selling at the appropriate time frame, is they really don't know what they're going to do after retirement. So they don't have a post-work plan, and they don't really have a clear understanding of, whether they should retire or not and why, and all of those kinds of considerations that go into it. So defining your goals for yourself is equally important to being able to describe it to a potential buyer. You want to consider what a successful outcome looks like to you. What are the most important elements of the sale? Normally, for most advisors, that's the well-being of their clients. And, specifically, what are your post-work goals? One of the things that's been determined in several studies is that those who do not have post-work goals have a difficult time letting go of their work goals. The next item, and this is a critical first step in most considerations around succession, is to know the value of your practice and specifically to have a formal practice valuation completed. Too often we see people using simple averages or rules of thumb in valuing their practice, and I can tell you it's definitely not a good idea, and especially when it is very, very likely one of your larger personal assets. I mentioned that the average valuation is in excess of $1,600,000, but what's more important than that is that there's a range of value. So if we look at the bottom and top 20% of practices in valuation, the range is 25%. So if you were to apply that range to the average size practice, that range represents $400,000 in actual dollars. Certainly the cost of a valuation is well worth understanding where specifically your practice should be in that range of value. And it also answers a lot of other questions about the practice. It can tell you about the profitability, which can impact the value. It can certainly indicate, the timing of a potential sale. For example, if it looks like the practice is shrinking and the clients are aging, then it's likely that you should monetize the equity sooner than later. So the valuation goes well beyond, simply flipping to the page where you see the number. And there's a lot of great information that's included in it. Really quickly on our own valuation process, as you can see here, if you're an advisor in one of our partner firms, which are Ameriprise, Northwestern Mutual, Raymond James, and Cetera, you receive a $400 discount. So the standard price is $12.95 and the partner firm price is $8.95. We use two different methodologies of value. We conduct both a market-based analysis and an earnings-based analysis, and the valuation is the average of those two results. And then probably most importantly is that we spend an hour going through the deliverable with you. So whether you're getting evaluation for succession or for some other reason, we'll talk about the results, specifically how to use those results to achieve whatever your goals are. And I think for most, that's probably the most valuable part of the process of receiving evaluation from us. Also, a huge benefit to advisors who are in our partner firms is that we've greatly simplified the data collection, and most of the data comes from specific reports that we give you instructions to find, as opposed to you having to go out and search for the data and input it into a long questionnaire. It's very, very user-friendly in that respect. Getting back to the checklist, number 3 is to tell your story. One of the things that's really critical in your ability to convey what you're looking for in a buyer is to tell them about your own practice, your values and so forth, so they can respond to that message. In our own process for selling a practice or listing it for sale on our Advisor Legacy platform, we ask the seller to really create 2 different written items. One is a description of their practice, and number 2 is a message from them explaining, why they're selling, what they're looking for, who the ideal candidate is, and so forth. And again, you really have to be able to communicate those items if you're going to, be able to determine which buyer is the best fit for your practice. Telling stories is very useful, and I think more impactful and more personal than just simply stating the facts. So if you can talk about, why did you go into practice in the first place? Maybe some specific examples of going above and beyond in your client service experience, really anything that makes it very personal. Why do you have a passion for serving clients, etc. I think that can be very useful in this type of a written document that you'll share with potential buyers. And again, you really need to paint that picture so they can respond to it and let you know if they are the correct fit for your practice, your clients, and certainly your staff as well. Number 4 is to take inventory of client deliverables. This is extremely important relative to the closing date. In most cases, specific work like financial plans that were started by the selling advisor should be completed by the selling advisor prior to the clients formally changing hands. In some cases, the broker-dealer will require that, and especially where items have been paid for in advance, like financial plans sometimes are. Most broker-dealers will have a department that will review this for you, and so it's a good idea in advance to set up time and to discuss their requirements with them and make sure that all client work is in process. I think you could also apply this to your client service schedule as well when you're thinking ahead and saying, I would like to potentially close in, January of next year. Then, you can kind of look forward and say, okay, this is when I normally meet with the majority of my clients, et cetera, and make sure those 2 things are going to mesh. And so it's really about understanding, what work is in process with clients, when you'll be meeting with them, and as seamlessly as possible, contouring your succession plan around that. One of the most significant items that's impacting practice value today and is going to have even be more impactful over time has to do with the average age of our clients. Currently, we track an average age of all clients in a client group of 61 years of age, and of the high value and affluent clients of 65 to 66 years of age. What we're starting to see in many cases is practices are getting near or at what I would refer to as a tipping point, and that's when their client group is approximately 4 years above the average, or if they're high value, and affluent clients are nearing the average age of 70, it really becomes impactful to the value of the practice. And the primary reason is that it's difficult to assume and project a growth rate on an older client group. And in fact, what we see in most cases is those practices are shrinking. The clients are withdrawing their assets. Some clients are unfortunately passing away, et cetera. And retention of those assets is extremely low industry-wide. So one of the ways that you can defer that risk, or at least in the buyer's eyes, minimize it if you do happen to have an older client group, is to create a report around generational planning. And it's quite a simple thing. If you take, at least your A client list, and for each of those clients, indicate yes or no. Are you doing generational planning with them? If the answer is yes, what does that look like? Perhaps is the spouse younger? Are you working, with the heirs, that sort of thing? And that can help remove some of the risks that the buyer might perceive relative to the average age of your clients. Another item specific to the clients, and this is going to be helpful in preparing for the actual transition activity, specifically the communication strategy, letting your clients know that you will be selling, or in some cases it's communicated as a merger ahead of a sale, is really based on client segmentation. And so again, you would separate your clients into A, B, and C clients. And generally that's how the communication strategy flows. And for example, you would call each of your A clients and inform them of your intentions for succession, whatever the specifics of that might be. Answer the questions that they have, and they're pretty typically the same. The first question a client has is, how is it going to impact them? And then once you reassure them that you're doing your best at finding the right successor or so forth, then generally that suffices their concerns. Then secondarily, they're happy for you to move on to that next stage of your life. So you would again call your A clients, perhaps some of your B clients who you feel might have a concern, and then a letter would go out to all of the clients, basically stating the same thing that you said in the phone calls. And that's followed shortly thereafter by face-to-face meetings between yourself, the clients, and the buyer and their team. Generally following the segmentation again, with the A clients first, then the B clients, and then the C clients as needed. So pre-segmenting your clients is a good step in preparing for that. And then if you could provide notes on, the upper level clients as well, that's going to be helpful to the buyer and make the process smoother when it happens. Just to kind of step back a little bit, when we're talking about these 10 steps and how they can help you prepare and also have a better outcome, what we're really leading up to is the success of the transition is what we refer to as the grocery store test. And basically what that means is that, after the practice has been sold, whether it's a year after, 2 years, 5 years after the sale, when the seller runs into their clients at the grocery store or somewhere else, and they likely will, normally they live in the same community, the best outcome is that the clients will thank them for doing a good job in selecting the right successor. And generally speaking, if that's the case, and we hope that it is, certainly that's where our efforts go in our sales, then you've had a successful outcome, pending that the price and terms are also fair and correct. That's about as good as you can hope for, that the clients had a good experience. Getting back to the list, logging future client opportunities can also be a great way to demonstrate to the buyer that the practice is still thriving and that there are additional opportunities with the clients or within the existing asset base. Even though future growth is an assumption of the valuation, and so that's built into the value, it still is important for the buyer to have the confidence, and it may have an influence on their ultimate offer of price and terms to you if you can demonstrate, that you have good future growth opportunities in the practice. A recent client of mine went to the length of putting together a list of their clients who have 401ks and what the 401k balances were as a way to illustrate that future opportunity. I thought that was an outstanding idea. So anything you can do like that, you want it to be fairly concrete, not pie in the sky type of stuff, but if you know of something that's coming in, or just, as that example illustrates, outlining or creating a report regarding the potential rollover money, then that's going to be certainly helpful to attract the right buyer. Number 8 is a great another way to prepare ahead of time for the sale and for the buyer's specific due diligence, and that is to list your major practice expenses. Those would be the operating expenses of the practice, things like office lease, staff compensation being usually the largest expense item, marketing, really anything that's transferable and an ongoing expense of the practice. While the buyer might have a different expense assumption than what the seller starts out with, the starting point is still critical and will have an impact on the price that they offer. It's become an increasingly heavily weighted item in respect to value as practices have gotten larger, because now most sales are no longer what you would call a book of business sale, but really the buyer is purchasing the enterprise itself, and so profitability becomes central when the enterprise is being sold. So they're going to assume normally, the office, the expenses of it, and the staff, and so they need to know very specifically what those expenses are. Number 9, and this is really for your own purposes in making the transition activity easier. And around that time when you're formally closing the deal is when it gets quite busy. And so the more you prepare in advance, the better off you'll be, and the smoother it will be. What you want to do here is to create a list of all of the business services that you subscribe to. And so that can be, certainly the office lease, what the terms, contact information is, things like phone service, internet, copier leases, really any of those items that are on an ongoing service. You need to know what the terms of the service are, whether you can exit from those at a specific time, and what the contact information is to make it easy for you to discontinue those services when appropriate. What we often see is that office leases can have some impact on the timing of succession, and many people kind of correspond those two, and aligning the time when the lease will be ending with their closing date, and that way the buyer has an option of either extending the lease or finding an alternative in respect to the office location. And then lastly is communicating your org chart or information around your team to a potential buyer. The good news is, and I know that most advisors have a deep concern for their team, is that most buyers' intention will be to retain your staff. Most buyers they're educated enough about this process of transition to recognize that the staff is a very large part of the continuity of client service. And so they certainly want to maintain that by retaining the staff, as long as you indicate to them that they should do so, and that certainly is the case in most sales. The way that you can assist with that is to create a list of the staff, what their titles, roles, and responsibilities are, compensation packages, and so forth, so a buyer can have the appropriate expectations on the front end and be able to communicate to you based on that information what their intentions are relative to your staff. In our own process of a practice sale, if the seller wants the staff to be retained, then we certainly put that out there on the front end, so any prospective buyers that we're speaking to will know that that's the expectation and be able to respond to it accordingly. So take the time to put that together, and I would say, it's pretty helpful if you describe the value of each person to your overall team. And I think that goes a little bit further than just saying, they're a paraplanner or assistant and so forth, but, really, what are they bringing to the table that's indispensable to the practice? So those are the 10 steps. Again, the more that you prepare in advance, and I certainly suggest that you do that if you're looking to sell in the near future, which would be, anywhere between 1 and 5 years, start doing some of those steps and you're going to certainly have a better outcome. Specific to some of our own services around succession, there are really 2 categories of practice sales. One would be what's known as a closed sale, and that's where the buyer and the seller have identified each other and are looking to complete an agreement between themselves. And certainly we have some great consulting and other deal-making services to help those 2 parties with the closed sale. Those would also include internal sales from the advisor to their associate advisor, or AFA. The other type of sale, which is probably less familiar to many advisors, is what's known as an open market sale. And that's the type that we conduct on our Advisor Legacy platform. So I want to just spend a few minutes going through that process so you kind of have an idea of what both look like and what the options are for selling your own practice. So the reason that we refer to this as an open market sale is because when a practice is listed for sale on our Advisor Legacy website, the sale listing goes out to all of the advisors who are on the same broker-dealer platform. So if you're an Ameriprise advisor, for example, only other Ameriprise advisors who are registered will see the practice for sale, and there are, I believe, over 1,200 registered buyers. So you're really increasing the scope of the potential buyers, which, in our experience, increases the likelihood of 2 different things. One, you are going to find the absolutely best fit of an advisor because you simply have more options. And number 2, the price and terms will be stronger than most closed deals because it's more of a competitive environment where people are making offers on the practice. So we handle the entire process from start to finish, representing the seller, which is a little bit unique in our industry. Most other listing services are simply that. They're agnostic to the buyer and the seller, or most other ones, they represent the buyer. We specifically represent sellers because of the things that I mentioned at the outset. Most only get one opportunity to sell and they have very little experience in doing so. And it is the most important transaction of their lifetime. So the first thing that we do in the process is we have an initial consultation with you where we talk about your goals, your timing, so forth. And then we collect quite a bit of information that will then be put into a profile of your practice. This will include the written items that I discussed about, your practice, what you're looking for and so forth, and then some higher level data about the practice. That profile is published on our Advisor Legacy website. And again, it goes out to all the registered buyers from the same broker-dealer. And then we'll also want to invite in other qualified candidates from the area and region. And the way that we do that is we'll ask the seller for a list of names. And also we'll contact the local field leadership of the broker-dealer and get a list from them as well, because we really want to start out with the largest pool of possible candidates as possible. All of those folks will have an opportunity to express interest in the practice, and they'll do so on our website. Once they've expressed interest, then we and the seller can go in and review the profiles that they will have built about themselves, what they're looking for, their practice, values, all of those sort of things. And it's really great information for our initial vetting process. So we'll go through and review all of the candidates who have expressed interest, and then we'll have a call or a meeting with the seller and do the same and decide of that fairly large group which we want to move forward in the process. And normally we'll want to narrow that group down to say 10 or less. The ones that we invite to move forward will then be invited to place an offer on the practice. And when they are invited, they'll have access to quite a number of reports that we will have uploaded to the seller's profile with the client information removed. And they'll also have access to the terms of the deal that we're looking for, and we will have worked with the seller to define those terms. What we don't ask for is a specific sale price. We want people to make offers that they're comfortable with and not react to the sale price. And one of the reasons that we do that is you collect a wider range of offers when you allow people to simply make an offer. And we use the higher range to negotiate with the best candidates. And that's part of the reason why, on average, we do much better than the valuation in respect to the price and terms. Once the offers have been received, and in some cases we've done a little bit of negotiating in the back end there, then we're going to do another round of vetting where we're going to narrow the group down even further to generally 5 or less candidates who will then move forward into our interview process. And that's really the most important part of the entire process, because it's where the buyer and the seller really get a chance to determine if there's a good fit. So the way that works is that we conduct the interviews with both parties. We go through a series of questions. The seller gets to ask additional questions, and at the end of the interview, the buyer gets to ask questions of the seller. Normally, coming out of the interview process, we're really one or two things have happened. Either there was a clear choice and the seller has made a decision on who they would like to select, or they've narrowed it down to a few top candidates, maybe 2 or 3 top candidates. And then we'll have additional due diligence opportunities like office visits, in-person meetings, maybe additional interviews, that really anything that it takes to distinguish between those 2 or 3 top candidates. In some cases, it may be the offer that would separate them, but more often than not, it has to do with due diligence around the fit. Once the buyer is selected, then we're going to shift gears a bit and help both parties complete the transaction. And what's involved there is getting the formal legal agreements completed, and our attorney does that on behalf of our client, the seller. Planning the transition of the clients, and one of our executive coaches who's supporting the sale will assist in the strategy around the client communication and meeting schedules. We're going to get the bank financing in place, and we work directly with many of the larger lenders in the industry, so we help facilitate that. And also working with the broker dealer to make sure all of their boxes are checked in respect to the client transition. So we stay involved from start to finish until the deal closes. The way that we're paid for the service is only based on the success of the deal. So we get paid a percentage of the sale price. The range is 2 to 6% depending on the size of the practice. Larger practices have a smaller percentage fee. And that was only paid when we successfully closed the deal and paid out of the funds of the sale. So that's our advisor legacy process. Again, our focus throughout the 4-month time frame that generally takes is really helping the seller find that advisor or team out there who they may not even been aware of, who's really going to be the best for their clients, so the seller can then communicate to the clients that they've really done significant due diligence in picking the best candidate available. So with that, I'm going to hand it back over to Tony, and he'll wrap it up and open it up to your questions. Thank you.
Great. Thank you, Todd, for that great information. As I mentioned in the onset here, if you'd like to ask a question, there's 2 ways you can do it. Both are on your GoToWebinar control panel. One is you can raise your hand and I'll unmute your microphone, or secondly, you can type in a question. Again, there is a handout that's in the GoToWebinar control panel as well, which you can download for your reference. So while we're waiting for some questions here, there's a number of ways you can get a hold of us. You can, take our free online assessment, which is on our website, and you can also contact us for a free 30-minute consultation. You can go to our website at keymanagementgrp.com. You can see our 800 number here, 888-848-3349. And then there's Todd's direct information on the bottom right-hand side of your screen, which is 248-825-8047. And his email address is tdoherty@keymanagementgrp.com. Well, Todd, it looks like we don't have any questions from our viewers today, so I want to thank everyone for taking the time out of their day. Hopefully, we're going to be hearing from you soon. I assume that since you're on this webinar, you're getting close to selling your practice, and we'd love to be able to help you do that, to help you find the best fit with the best terms with the best price. So have a great day, and we hope to hear from you soon.